Imagine sitting on a beach in Dubai, watching the sunset over the Persian Gulf. You're sipping on a fresh coconut and you can't help but wonder, how did this place get so rich? What's their secret? Well, it's not what you think. They don't have oil money, they have Arab money, a whole different league. And today I'll spill all the beans. In this episode, we're diving deep into the minds of Arab investors. Forget everything you know about typical investors because these guys play a different game. We're talking about the heavyweights like Saudi Arabia's Public Investment Fund, Abu Dhabi's ADIA, and Qatar's QIA, also known as the Qatar Investment Authority. These funds don't play by the same rules. It's a unique investment style that has made them super successful. Before we dive in, here's a little quiz. Let me know your thoughts. Which country has the biggest wealth fund in the world? A. China. B. United States. C. Saudi Arabia. Pause the video here if you want to make a guess. Let's start with no. 1. Their wealth funds are power tools. In the world of investments, there are two types of players. One is in it for the quick buck, the other one is in it for the long haul. Arab investors fall into the latter category. They use their massive wealth funds not just to make a profit, but to gain control and influence in various sectors. For example, the Saudi PIF owns stakes in companies across different sectors, from energy giants like Saudi Aramco to entertainment companies like Kingdom Holding Company. Abu Dhabi's ADIA is invested in almost every major industry worldwide, including banking, energy, and even agriculture. Qatar's QIA has a diverse portfolio ranging from Volkswagen to Harrods department store. These investments aren't just about making money. They're about wielding significant influence and shaping industries. By having huge stakes in major companies, Arab investors can have a say in how these companies are run, and they can potentially influence policy decisions. This gives them an edge over other investors seeking purely financial returns. No two buying for influence, not hype. Have you ever wondered why Gulf countries spend billions on buying football clubs, luxury brands, or hosting major events like the Olympics? Sure, there may be some glitz and glamour associated with these purchases, but the real reason goes much deeper. When a Gulf country invests in a popular football club like Manchester City, Paris Saint-Germain, or even Inter Miami, they're not just buying a sports team, they're buying a global fan base and soft power. They're building relationships with fans around the world and gaining respect for their country. Similarly, when they invest in luxury brands like LVMH or Cartier, they're associating themselves with quality, elegance, and prestige. These investments are about creating quiet influence. It's not about showing off. It's about building connections and opening doors to exclusive circles where important decisions are made. It's about getting into rooms where deals are closed and policies are shaped. It's about creating a network that extends far beyond the realm of sports and luxury. In fact, the goal is to become part of the establishment, to be seen as a reliable partner and a key player in the global arena. Think about the Olympics. When a country like Qatar wins the bid to host such a huge event, it doesn't just boost its economy, it elevates its status on the world stage. Suddenly, Qatar is on everyone's radar. It's attracting global attention, and businesses want to be part of this prestigious event. This is what we mean by quiet influence. It's not about making a flashy statement. It's about making strategic moves that pay off in ways that go far beyond the initial investment. No. 3. Investing where the future is. Let's be honest, most investors are obsessed with the United States and Europe. But Arab investors, they're thinking ahead, looking at emerging markets and frontier economies, especially in Africa and Asia. They're pouring billions into infrastructure projects in these regions. Roads, bridges, airports, energy projects, ports, you name it, they're investing in it. They're targeting areas with high growth potential, places like NEO, a futuristic city in Saudi Arabia. Why are they going all in on these places? Simple, because that's where the future is heading. They're repositioning themselves to benefit from the next wave of growth, and they're re-steering clear of the crowded US and European markets. Instead, they're forging new paths, investing in places that others aren't, and reaping the rewards of being early to the game. In essence, they're not just investing blindly, they're strategically mapping out the future of trade, transport, and business. They're re-looking at the world with a long-term vision, and they're re-betting big on the untapped potential of emerging markets. Number 4. Patience is their advantage. In the fast-paced world of finance, patience is a virtue that many investors lack. But Arab investors, they've got it in spades. While Western investors often see quick profits in 5 to 7 years, Gulf investors are in it for the long haul, thinking in terms of decades, even spanning multiple generations. They don't panic or make hasty decisions based on market fluctuations. They trust in their long-term strategies and stay committed to them regardless of short-term challenges. For instance, when others might be tempted to pull out due to market volatility, they see it as a buying opportunity. They understand that short-term losses can be part of a long-term winning strategy. This level of patience allows them to weather market storms, maintain a level head, and seize opportunities that others might miss. In essence, their ability to remain calm and patient in the face of market ups and downs is what gives them a competitive edge. They're playing a different game. A game of strategic patience where they're willing to forego short-term gains for long-term success. No fun. They stay calm when others panic. Picture this. It's a typical Monday morning. Your phone is blowing up with news of a major market crash. Investors are freaking out, selling off their assets left and right. But what do you see? An opportunity, a chance to snap up quality investments at rock-bottom prices. That's exactly how Arab investors roll. When the markets are in turmoil, they stay cool as a cucumber. While others are hastily selling their holdings, they're calmly buying up assets that have been battered by the market downturn. It's a mindset that sets them apart from the emotional roller coaster that drives many investors. They're not swayed by fear or greed. They stick to their strategic plan, buying what others are afraid to own. This discipline enables them to build strong, diversified portfolios that can withstand market fluctuations. As Warren Buffett wisely said, "Be fearful when others are greedy and greedy when others are fearful." And that's precisely what Arab investors do. They capitalize on the fear in the market, turning it to their advantage. They're not just weathering the storm, they're thriving in it. The big idea: Arab investors are a breed apart. They're the sharks of the financial world, silently swimming in the depths, patiently waiting for their moment to strike. Unlike the amateurs who chase quick profits, Arab investors play a different game. They're in it for the long haul, focusing on strategic investments that offer long-term value and potential for growth. They're not swayed by market sentiments or social media hype. They see beyond the surface, identifying hidden gems that others might overlook. With a keen eye for spotting undervalued assets and a willingness to hold on for the long term, they're able to generate substantial wealth, secure their economic futures, and shape industries to their advantage. So while others might be caught up in the frenzy of the moment, Arab investors remain focused on the bigger picture. They're not just riding the waves, they're steering the ship, charting their own course to success in the ever-changing seas of the global market. But now I want to hear from you. How do you invest your money? What are your strategies for long-term growth? Share your thoughts in the comments below. And hey, if you enjoyed this episode, don't forget to hit that like button and subscribe for more insightful content. Thanks for tuning in, and until next time, keep investing wisely. Now let's talk about that quiz question. I asked you which country has the biggest wealth fund in the world. Well, the answer is none of the above. It's actually Norway. Norway's government pension fund, Global, formerly known as the Norwegian Oil Fund, is the world's largest sovereign wealth fund with assets under management exceeding $1.35 trillion. The fund was established in 1990 using revenues from Norway's petroleum and gas production to invest in a wide range of international markets. The fund's primary objective is to ensure the long-term sustainability of Norway's wealth for future generations.